A Santa Claus rally is coming, and I want you to be prepared for what this looks like this year, December 2024. Now, I know it's early. The time of this recording, we're talking about November just finishing up, and what a month it has been, from the stock market to the crypto market to this new president-elect that's coming in that will be inaugurated in January of 2025. There's a lot on the horizon, and a lot of people are very intrigued around how this new economy may pan out, especially with the T word in play, the tariffs that might be in place, but that's not stopping this market right now. So we need to still, as I like to say, keep our head on a swivel, be able to trade and also invest responsibly so you don't get this rug pull right out under you and you don't have the ability to recover or be able to buy the dip or protect your gains, whatever it might be. So let's talk about it today in today's video. My objective for everyone, especially for my new and developing investors and traders, is to understand what this cycle looks like, okay? Especially going to the holiday season, a lot of people can be, distracted by family, friends, travel, buying things that they know they don't need, okay? But I do it as well. But make sure that you are allowing yourself to invest in not only to your knowledge and your mind and your education, especially this time. If you've noticed, there's been a shift. There's been a shift of folks like, I don't need this, I don't need that. Like, I need to learn how to generate some income. I need to learn how to invest and see what that may look like, okay? So if you're new here, my name is Dr. B. I'm a holistic life and business coach and strategist for entrepreneurs and thought leaders. I've been coaching for the past 8 years, and thank y'all so much for all the support on the videos. It's so kind of you to say, hey man, it seems like we're having a conversation. You seem like a cool dude to talk to. It feels like your explanation and simplicity, the way you explain things, and that comes with skill of just communication and coaching and consulting for a while now. I was a former pharmacist, undergrad in chemistry, matriculated my way into full-time entrepreneurship for the past 8 years. It has not been an easy road, but as you can see, I've gained a lot of skills, knowledge, and education to be able to provide it back to people in hopefully a simplistic way. So if you're about that, if you're about learning, welcome to the channel. Thank you so much. Go ahead and check all the educational videos. It's not just on trading and the markets. It's also about the psychology of the mind, understanding how to discover your purpose. That is why I entitle myself a life coach and a speaker. All right. So would love to have you inside of our community, and our community is Leverage University. All right. Leverage University. Would love to have you inside of there. We have our university level where we have all of our access to all of our channels, our resources here, our community hub, our master classes and boot camps. I do one-on-one mentorship. So there's my clients right there. You have a private chat. So there's a lot of activity in here. As you can see, our club rooms is just a general chat for our community. So if you join just the community club room section, you'll get all these different chats where you can talk real estate. We have real estate professionals, doctors, physicians, lawyers, all those good things inside of here. So if you're about a professional community, being able to understand how to communicate, trade in the financial markets, generate business and income, try to excel in your career, relationships, all those things, we'd love to have you inside. All right. This is about leveraging your totality of life. All right. Well, let's jump into it and discuss this Santa Claus rally. All right. So I'm going to pull this up here. So the Santa Claus rally is typically a 7-day period leading up to December 25th. Okay. So it typically starts around the 18th, 19th of December or so. So about a week before the holidays start to span in, and then it starts to kind of peek into the new year, really the first couple of days of the new year. So you can see this chart here that this is a percentage change in the S&P 500 in the week before December 25th. Okay. So look at here in 2021, we had a 6% increase, roughly around a 3.5 or 3% increase, just slightly above about 0.5% in 2019. 2018, we had a downturn right there in 2018. And then 2015, you can see here all these upticks. And then 2022, 2008, obviously, we know what happened in these years spanning. So I wanted to give you an idea that typically there is a rally into the end of the year. All right. So what does that mean for us, and how is this year going to span out, and is it going to do the same thing? So what I want to do is really, I'm a big history buff. So you can see here that it was founded by Yale Hirsch, okay? The first 2 trading days in January are included in the rally. And then you have the Santa Claus rally here, which is cyclical. There's historical patterns. And what causes this Santa Claus rally? Okay, several theories, including investor optimism, right? End of the year, holiday spirit, We're going to have a great new year. Let me put some money in the market so I can yield that 12, 13 to 15% in the S&P for the new year, right? This year, we're upwards of almost 30% up on the S&P, which is absolutely amazing. So will we continue to finish out strong, right? Because this year is a historical year for how much the S&P is up over the year. Okay, so I want to show you here what that looks like. Let's jump into Yahoo Finance, and I want to go to the S&P. Okay, and we still have those rate cuts that could be paused. So the next Fed meeting in December. Remember last month, if you've been listening to some of my videos around, if you go look at the thumbnails where it says maybe the selling's not over yet. This is the reason why, is because Fed Powell is talking about that inflation looks good, right? Like we may need to slow down on these rate cuts. So that's why the market began pulling back slowly. And could this selling could continue if he does pause the rates? Okay, so if we do have a rate cut pause, that could be our push down into the middle or the early part of December from this big historical November rally after the election, and then go into December with a little bit of selling and then run into the new year. Now, I do believe, this is just my opinion. My opinion is that there may be some profit taking off the table leading into the Trump inauguration. Okay, so that is right around the middle of January. So I do believe that that will start to have just a little bit, because if I'm big money, right? If I'm hedge funds, investors, and there's the T word on the table, right? The tariff word. Now, there may be some inside information that we don't know, but if there's the T word on the table, then that could be a little bit of concern and maybe wanting to just wait it out and see what happens. Okay, so I just throwing out this hypothesis and theory based on my research to see if it may come true. Okay, and we trade and we watch the markets each week to get updates. All right, but you do have to develop some type of hypothesis so you can be prepared, right? Some if this, then that. Right. All right. So let me jump into the S&P SPY, or let's just do let's do SPX here. It's going to load the chart. And what I want to do is I want to go out to 1 year. Okay. This gives you a visual. So in 1 year, we are up. This is correct, if it's loading correctly here. Yeah, we're up 32%. 32%. So I cannot see the market personally, right? And I could be wrong. I cannot see the market pushing up too much further, going into 40+% finishing off the year, okay, without any profit taking leading into an inauguration, okay? So that is my thesis. And here is also another reason why, as I tell all of my supporters, subscribers, that we've got to pay attention to this fear and greed index, okay? We have gotten up into greed and extreme greed, and we've pulled back, and then we've gotten the dip bulk and we've rode it back up. All right. So please pay attention to this fear and greed index as we go into the first part of December next week to start off a new month. We might rally a little bit more. And then towards the end of the week, we could see some selling coming in as we have Fed interest rate decision day coming. We have some more inflation data coming. So I do believe there's going to be some profit taking the more that we push up. I'll show you what that looks like on the charts in just a second. So do you see how 0.1, 0.2, right, for as far as a pullback before that Santa Claus rally? All right. So let's jump into the charts. My favorite place here. Okay. My favorite place on the charts. Let's look at the S&P 500, and I like to look at SPY. Okay. If you like to look at the futures or ES, okay, you're more than welcome to correlate that. I will jump into it briefly. But let's look at SPY here. Okay. SPY just made a new all-time high to finish off. At the time of this recording, you see here's November 29th. So we got one more day left in the month. Okay. So I do believe that it wanted to finish off the month strong, as typically we do for a nice strong month. Okay. If I look at the monthly candle, look at this candle. Look at this candle. You're talking about the month of November up roughly about almost 7%. Okay. 7%. Absolutely an amazing month of November. And November is typically a very bullish month for the market anyways. I can go all the way back to a bull market, which was last year from right here, 413, and it ran up to, is that about right? 430. Oh my goodness. That was November? Sheesh. 413 to 451. Okay. So you look at this back here, November 2020, 312 to 342, 40-point move. Okay. So do you see the November month is typically a bullish month? So take this into consideration going into these every year you can plan where you're going to put your money in the market and when. Okay. So November is a very bullish month. Okay. The summer is typically bullish if we're in a bull market. The first quarter of the year can be bullish, but it also can be a little bit bearish depending on the type of year that we're having. Okay. So that being said, what I could see is a couple of things. All right. Got a couple of things on the horizon. As long as SPY is above 600, we're going to push up into 605, and there have been potential opportunities for us to push into 610. Okay. So I've got 605 on horizon. I want to kind of see how we react there first. Stocks like to move in round even numbers. So they like to go into 600, nice psychological number for SPY, then 605, then 610. You get my drift. So that is an easy way to kind of see for my beginners how and where it's going to go in the short term. Because what you don't want to happen is you don't want to get caught into this and have your pants down. Okay, just saying. All right. So bullish, and you start chasing, right? And then it pulls back and finds a resistance and pulls back. Okay. So as long as it's above 600, right, take the pullbacks and then take those call opportunities or those short trading opportunities. Okay. Something like this. Okay. See if it holds 600. If we hold 600, we can run back up to 605. Okay, something like that. Okay, now at 605, I'd be a little bit cautious because we could be approaching extreme greed. All right. So, Brian, get to the Santa Claus rally. What are you talking about? Here's what I would want the Santa Claus rally ultimately to look like. I want personally, okay, if we break back underneath 600, okay, if we break back underneath 600, we have some type of selling coming in, maybe a rate pause or something like that, and we get some drastic selling coming in the first part of December, okay? That next week leading up into, remember, the week before Christmas, why our buying all these Christmas presents, wealth gap is being created, right? Make sure you're paying attention to the markets that you can potentially rally for a nice end of the year trade or opportunities if you trade equity or futures, okay? So here's what it would look like, what I would like to see, okay? Pull back again to 585. Man, this gap fill would be awesome. So gaps, this is the election gap, okay? So this gap fill would be awesome if we could fill that gap somehow before the Santa Claus rally into the new year. Now, this might get filled potentially. I'll show you what it looks like in 2022 when Trump gets inaugurated, okay? This gap could get filled drastically, okay? Especially if he gets inaugurated, tariffs, things, tweets come out, volatility, it creates scarcity for folks, right? Until things settle in. Okay, so I could definitely see, I would love a pullback to these lows right here at 585. And I would love to see this 575 again. Okay, so watch, it needs to break back underneath 600 first for that to happen. So any of my dip buyers, if you want to be patient, I don't like to chase new all-time highs. You can short trade up here, meaning day trade, right? Get in, get out, take your profits. But if you're trying to hold calls or hold your position and ride it higher into 620, 630, all that stuff without a pullback, you're going to get caught, okay? You're going to get trapped. Go listen to or go watch my bull trap, okay, video, all right? Watch my bull trap video. So I will continue to remain bullish as long as we're above 600 on the SPY. Okay. If we lose 600, that is when the bears or the sellers are going to step back in probably a little bit more aggressively to try to pull this thing back down. Okay. So watch out for that 600, how we react there. If we pull back to it, watch it. There's your answer. So if we get a massive pullback, you see red and blood in the streets and pause rates and scarcity, that is your cue. Okay. That is your cue for potentially that Santa Claus dip buy pickup. Okay. Type in the fear and greed index, see if we're in neutral or we're back in fear, and then ride that wave into the new year. And then, in my opinion, start trimming some profits potentially. Okay. It's not financial advice, just giving you historical context. Let me show you, like I promised, what 2022 looked like. Extremely bullish, right? Coming into 2021, and we enter into, right? There's the weekly. Extremely bullish. Here's 2020 to 2021 right here. Okay. Extremely bullish. Okay. We enter into 2022 right here. You see this Santa Claus rally right here? There's the pullback right there. There's the pullback. There's the rally. Okay. There is the first week of January, red. Okay. So this is the type of sentiment I may be looking for potentially coming into 2025. Okay. We don't know. No one has a crystal ball. But what we're doing as investors is we're able to read the charts, look at the historical data, and then also look at what the fundamentals are showing us, meaning inflation data, right? Consumer price index, our PCE data, consumption, right? Existing home sales, new home sales, all those things. So we still haven't had, as I wrap this video up, we still haven't had our report from the unemployment data, really from the hurricane and people losing jobs towards the end of this year. So when that data comes out, I'm going to be a little bit more cautious about where the economy stands. As we all know, it is a lot of optimism, but I do believe there's going to need to be a breakdown before a build up. All right. Breakdown before a build up. All right. So hopefully this makes sense. Okay. So I approached it from a investor, day trader, trading standpoint, options, futures, things of that nature, equity traders. And I also addressed it from anyone that is looking to find buying opportunities. Okay. Buying opportunities. In my opinion, like I always say, not financial advice, but when we're at all-time highs, DCA into your favorite stocks. I'll show some that I like that are on a dip right now. DCA mean dollar cost average, putting on recurring investment, say $5 a day, $5 a week, $10 a week into your favorite stocks if they're at all-time highs. Okay. So there are a couple that are interesting. Our semiconductors are starting to pull back. So the NVIDIAs, the AMDs, like when I see stuff like this, AMD pulling back from highs of 200 plus, okay, back down to 137. You're talking about 50% off roughly. Okay. So keep an eye out on something like this more specifically as it's pulling back versus, in my opinion, okay, something like an Apple that's running. Okay. You can still dollar cost average, buy your Apple up. We know that Apple's not going anywhere, right? It's going to be at 300 again, running and running and running. Okay. So this is the type of chart where I like to DCA in my opinion. Now, you can't just buy anything, right? But look at Google. Okay. You can't buy anything that's just showing red, but look at Google. Google is not at all-time highs at 191. It has pulled back to the 160s. So here is again a solid tech company, obviously, right? Search engine that has opportunity to run 40 points back up to the highs and take out 200. Okay. Amazon, as everyone knows, one of our tops made a nice recovery here off of 195 and reclaimed 200, pushing up back into 215. Do we get Amazon back lower below 200? I think we're going to need some kind of crash or something like that, a correction more specifically to pull us back to fill this gap and get us back down. It'll come back. It's just a matter of when. Will that be at the end of 2025, middle of 2025, World War III, or tariffs? I don't know, right? But let it come back to you, okay? Do not chase, okay? In my opinion, dollar cost average when you're chasing for equity, okay? mRNA, the healthcare sector, very interesting, okay? I know people have a lot of concerns around the healthcare sector, but please pay attention to it as if we go into some type of recession, healthcare typically performs very, very well. All right, let's jump into a couple others. Tesla. I know a lot of people want to look at Tesla. Tesla holding up pretty nicely here. Nice finish towards the end of the day. A lot of buyers stepped in right around 330 again. Would love it back at 300. And there are some gaps to fill. So ultimately, if it can somehow fill some of these gaps back down, it will happen. See that gap, gap, gap. Who knows? But when these gaps get filled, Tesla will be back at some point back in the 200s. Whenever it does, make sure you pay attention to that. But otherwise, it's trying to head to that 400 level. Okay, especially with the cabinet and the position that Elon Musk holds now with the new president-elect coming in. All right. Let's see. That's about it. QQQ lagging behind a little bit. It's really because of the semiconductor sector. Okay, so QQQ is the tech fund, the tech index. So QQQ, pay attention to that. It is, as you can see, lagging behind versus SPY is taking out new all-time highs, but QQQ is lagging behind. It's because of NVIDIA, right? Lagging behind because of AMD, the semiconductor sector, QCOM, AVGO, all those semiconductors. All right. So I can go through this all day. As you see my watch list here, love it. But maybe I'll make a separate video. Let me know if there's any stocks you want me to go specifically through with analyses. But thank you all so much. Peace, love, and blessings. Until next time, hopefully you have a great holiday weekend. Enter into December. Look forward to seeing you inside of Leverage University and our trading floor and all of other opportunities that we have to grow personally, career-wise, relationally. All right. Peace, love, and blessings. See you in the next one. Bye-bye.